Welcome back, everyone. I hope you're having an amazing day. If you're currently holding LAB token or thinking about buying it, make sure you watch this video until the very end because today's technical analysis could help you prepare for the next major move in the market. As always, this video is based purely on technical analysis and should not be considered financial advice. Always do your own research and never invest more than you can afford to lose. Now, let's jump straight into today's chart analysis. LAB continues to trade inside a consolidation range, and at first glance, some traders might think nothing is happening. However, experienced traders know that periods of low volatility often come before large market moves. Instead of chasing random price fluctuations, our goal is to remain patient and wait for confirmation. The market always rewards discipline, and right now, patience is more important than prediction. If you watched our previous analysis, you'll remember that we identified 33 cents as the most important resistance level on the chart. That analysis remains completely valid today because price has still not reached or tested this resistance. The level remains fresh, untouched, and technically strong. As long as the market stays below this area, it continues to be the key level every LAB trader should monitor closely. Many new traders believe they need to trade every single day, but that mindset usually leads to unnecessary losses. Professional traders understand that waiting is also part of trading. When the market is consolidating, there is often no high-probability setup available. Rather than forcing entries, we simply allow price to develop naturally until it reaches an area where we have a clear trading plan. At the moment, buyers and sellers appear to be in balance. Neither side has shown enough strength to take full control of the market. This explains why LAB has been moving sideways instead of making a strong trend in either direction. Sideways movement may look boring, but it often represents the market building energy before the next breakout or breakdown. Let's now discuss the first scenario that we're watching very carefully. If LAB moves higher and reaches the 33-cent resistance level, we don't want to enter a trade immediately. Instead, we want to observe how price behaves around that area. If sellers defend the resistance aggressively and we see strong bearish confirmation, such as a bearish engulfing candle, a shooting star, or a long rejection wick, it would suggest that buyers are running out of momentum. That type of price action would increase the probability of another move lower. If that bearish confirmation appears, our downside target remains around 12 cents. This target is based on previous support levels and the overall market structure. Resistance levels exist because sellers have historically entered the market there. If history repeats itself and sellers regain control once again, another decline toward the lower support zone becomes a realistic possibility. However, it is important to understand that we never sell simply because price reaches resistance. Waiting for confirmation is what separates disciplined traders from emotional traders. Entering too early can easily result in unnecessary losses if the market suddenly breaks through resistance. That's why confirmation always comes first, and the trade comes second. Now let's look at the bullish scenario, because every resistance level can eventually be broken if buyers become strong enough. If LAB manages to break above 33 cents with strong momentum and increasing trading volume, that would be our first indication that market sentiment is beginning to change. A breakout alone is encouraging, but it still isn't enough for us to enter a position immediately. One of the biggest mistakes beginner traders make is buying the very first breakout candle. In many cases, price breaks above resistance only to reverse sharply a few hours later. These are known as false breakouts, and they often trap impatient buyers. To reduce that risk, we prefer waiting for a clean retest of the breakout level. If LAB breaks above 33 cents, returns to test that level as new support, and buyers successfully defend it, that would provide much stronger confirmation that the breakout is genuine. A successful retest shows that previous resistance has now turned into support, which is one of the strongest technical signals in price action trading. Only after seeing that confirmation would we begin looking toward our bullish target around 55 cents? Another factor that deserves attention is trading volume. Volume often tells us whether a move has real conviction behind it. If price approaches resistance while volume continues declining, there is a higher chance that the breakout could fail. On the other hand, if buying volume increases significantly as price moves above resistance, it shows that more participants are entering the market and supporting the move. Strong volume, combined with a confirmed breakout, usually creates a much more reliable trading opportunity. Market psychology also plays a major role during these situations. Many traders become emotional when they see price moving quickly. Fear of missing out causes them to buy at the worst possible moment, while panic causes them to sell near support. Successful traders avoid making decisions based on emotions. Instead, they follow their trading plan regardless of market excitement. Having clear entry conditions, stop-loss levels, and profit targets helps remove emotional decision-making from the process. Risk management remains just as important as technical analysis. Even the strongest-looking setup can fail because financial markets are never guaranteed. That's why protecting your trading capital should always be your highest priority. Never risk a large percentage of your account on a single trade, and never assume that any prediction is certain. Long-term success comes from consistency, not from trying to hit one massive winning trade. Looking at the overall chart, nothing has changed from our previous analysis. The market continues to respect the same structure, and 33 cents remains the most important resistance level. Until price reaches that area, we simply continue monitoring the market and waiting for confirmation. There is no advantage in rushing into trades before the chart provides a clear signal. To summarize today's analysis, our plan remains straightforward. If LAB reaches 33 cents and forms strong bearish confirmation, we will continue looking toward a potential downside target around 12 cents. However, if buyers successfully break above 33 cents, hold above that level, and complete a clean retest, we will shift our attention toward the bullish target around 55 cents. Until either one of those scenarios plays out, patience remains the smartest strategy. Remember, successful trading isn't about predicting every market move. It's about waiting for the highest probability opportunities and managing risk properly when they appear. The market will always provide another opportunity, but only if you protect your capital and remain disciplined. Now I want to hear from you. What do you think will happen next? Do you believe sellers will continue defending the 33-cent resistance and push LAB back toward 12 cents? Or do you think buyers are finally strong enough to break above resistance and start a rally toward 55 cents? Let me know your opinion in the comments below because I'd love to hear your thoughts. If you found today's analysis helpful, don't forget to leave a like, subscribe to the channel, and turn on notifications so you never miss our latest crypto market updates. If you're looking for more detailed technical analysis, exclusive trade setups, and real-time crypto signals, be sure to join our Crypto VIP community. Thank you so much for watching. Stay patient, stay disciplined, always manage your risk, and I'll see you.